All right. Give me just a minute to drop the link for people and we will dive into some of these charts. Let's see here. Go ahead and if you join here in the next few minutes, if you're on the actual live itself, feel free to throw stuff. If there's certain tickers you want to see, throw those into the live chat and I will take a look at them as we work our way through. Drop it in a couple of more places because everyone is welcome. See any tickers I want specifically, feel free to throw those in the live stream chat. If not, we'll be going through a lot of the big tech stuff as well as going through some of the more common tickers that several of us are trading right now. And spam is out of control on a lot of these Facebook groups now. Yo, Armin, what's up, dude? I saw those percentage gains you threw up on that other group. That was crazy. Let me jump over here real quick and let's start with Tesla. So, like, I posted detailed analysis to pretty much everywhere for the weeklies, so we can glance at those too, but definitely want to look at the dailies too. While we had like really nice green movement towards the end of the day session today on a lot of tickers, we're not out of the woods. So just this is one of those areas where people really have to be cautious. Um, I'm in long-term shares on quite a few tech tickers. That being said, I'm hedging with covered calls. This is not one of those areas where you just want to go heavy loading up on calls, because if we chop or trade flat with such high volatility we've seen the last week or two, the premiums can get wrecked and burned if we trade relatively range bound over the next week or so. Speaking of volatility, it's been super insane. Y'all have all seen that and kind of lived through that, but I'll go back and clear out some of this stuff, which that Head and Shoulders played. Honestly, I'm gonna delete it now. I wanted to mention real quick because SPX, a lot of people have been trading that, to kind of give clarity on how bad the volatility is impacting premiums, not just for SPX but across the board. It is basically some contracts that may have been 0.5% out of the money strike prices on SPX last week that we were trading at on a $200 to $500 a contract. Those same contracts that were 0.5 to 0.6% out of the money strike prices today were like $1,400 plus a piece. So just to give you a little bit of insight into how nuts the implied volatility is on a lot of the options right now, and why it's really dangerous to swing trade a lot of these more expensive tickers, whether it's calls or puts, so it's not like a biased thing towards the downside or anything like that. People need to be cautious with calls and puts. Yeah, Jeff, it's got pretty rough over on that group, dude. Like, the spam has got bad, and I don't know if it's just not really being maintained or what the deal is. Sorry, not to derail, just kind of saw that. But yeah, the reason I mentioned that is because while people may make small gains on swing calls or swing puts on a lot of those big tech tickers right now, you're risking a lot of capital for something that may or may not work out overnight. And all it takes is one random tweet, one random tariff news, one random anything right now with the way that the market is reacting to completely and totally wreck the premiums against you and they never recover. Or with IV being the way it is, if we open the next day relatively flat, the contracts get wrecked just the same. This is especially true on QQQ and SPY, where if you actually look, the ones that really won this past week, aside from people that were scalping and day trading intraday, the ones that really won are the ones that were selling premiums. And I say that because even on days like today, where, yeah, we closed, where did we close? Let's look at a smaller time frame even. So we closed right here, right? And then we opened relatively in the same range, even a little bit higher, and moved a little bit higher. I was watching premiums this morning, and even with that movement up, what is that percentage was? I'm curious because I really want to see. So even that move that was almost 0.8% up, call options barely increased, if any. And I know a lot of people are used to staying in something till it's 30, 50, 100% gains and stuff like that. And it's way too risky to swing calls and stuff right now on a lot of these big tech tickers. And I say calls, again, not being bearish, but because I know a lot of people are buying right now trying to catch the bottom. And personally, I wait for reversals before I go on bigger, heavier stuff like that. But also wait for the premiums to settle down just so the risk to reward makes a bit more sense. Still steering clear of swinging anything on big tech and the indices right now. Have been trading a lot of intraday stuff on SPY, SPX, QQQ, lots of futures trading. But then also there's a lot of good tickers that are kind of cheaper tickers. And again, we're going to go through the charts for all of these big tech things here in a second. But there's a lot of cheaper tickers that you can get exposure in right now that have a lot better risk to reward. I mean, Billy has been freaking killing it. And this is a China-based stock, by the way. But, like, let me show you all a few examples, right? So Billy, which the calls that we've been swinging, they were higher over here. Stayed in some runners. Those runners today are at 316% gains. So I'm not telling everyone, like, trade these things because you can get multi-100% gains, but those contracts also cost $125 a piece and are now over $520 versus if you were to try to swing a similar call option on one of the big tech tickers right now that's at a strike price that could go in the money because those were Billy $19 calls. So we entered them when they're right just barely in the money, and now they're multiple dollars in the money. So significant increases there. Whereas in order to trade strike price or contracts that have any kind of reasonable price whatsoever on their premium, you're having to go way out of the money on big tech tickers and SPY and QQQ and others right now, which is putting you at risk for multiple different reasons, part of which I described earlier, but also when you go that far out of the money, if things do trade relatively flat, you're never going to have your premium recover on SPY or QQQ and a lot of the big tech tickers. You just got to be careful with it. Baba is another one that's just been killing it. That I'm kind of sad I didn't add more calls, but it does look like Chris, I think me and you were talking about this morning in the lounge where it was in pre-market because I wanted to see whether or not it rejected at 143.34 again, which it did. So I'm watching that because ideally I would love to see Baba consolidate, hold strong here, and then get a breakout to the upside. But it needs buyer volume and a strong piercing candle to blow through that resistance level or supply zone. So keep an eye on that. Rocket was another one that was doing great today. I didn't see it towards close. Oh, yeah, okay, it kept on ripping all day. So there's another good example of something that premiums are way cheaper on stuff like this, because for one, it's only a $12 to $15 stock at the time of entry, but also you're not getting as much exposure and impact with all the tariff discussions and random news from Trump and everything else that is impacting the stock. It just doesn't care. So rocket calls are still rocketing, no pun intended, maybe a little bit intended, don't know. But those are up 140% right now, and still plenty of room to run. Those things they don't expire till June, so that's another example where you can get into contracts for a premium of $120 or $120. They're now at $288. So if you have a larger account, you want to trade more contracts, go for it. Trade stuff that has better risk to reward ratio, because it's going to make sense in the long haul. See, jumping back real quick. Sorry, checking 3 different places to make sure I cover bases for anybody that's asking for stuff. Yep. Let me look at Lockheed real quick for her. Yeah, so Lockheed, that's why those calls are ripping. I get sidetracked with a lot of our intraday or shorter term trades, and I sort of neglect a little bit the longer term swing trades that we're in. But I mean, Lockheed's got till June, and those calls are up 102% right now. They were up higher this morning whenever we broke above that. So it looks like we did temporarily reject at that resistance for the time being. But ideally, I'd like to see us push back above that, which we still have strong volume. On the weekly, it does look like we're running smack into this downtrend. We attempted the breakout, but rejected. But I mean, that's a good sign. Those 3 solid green candles on the weekly. To show you an example of what I'm talking about, Lockheed right now, right? On the weekly, QQQ weekly, polar opposites. This is not a safe spot to go long on something. Lockheed is kind of coming off of a rebound here, so I'm not saying enter right now. We entered off the reversal earlier on, but even then, you've got the bounce off of a support zone here that's looking pretty solid, and it's actually broken out, it looks like, on the daily. So that's looking good. It is above the 50-day EMA now, moving towards that 200 EMA, which coincidentally is right where that gap fill is. So we'll see what Lockheed does in the coming weeks. With all the increasing global tensions, it's probably going to get some good movement. Palantir probably has similar movement going on, if I was to guess. Yeah, Palantir's trying to come off a reversal too. I mentioned Palantir in that group because even though it's not directly, it indirectly is a defense stock because of cyber intelligence and all that realm. So I'm watching Palantir really closely to see what it does here, because there's a bear flag in play. It's consolidating. We have to see in this consolidation, is it going to hold this as a demand zone, or is it going to break to the downside? So I'm really hoping this thing holds right here and pushes up higher. You can see that the difference between our weekly candles here, it's actually attempting to hold above that, thus the wick. Whereas we aren't so lucky if you look over at some of our others where this weekly close was last week's 84.92, right at last week's weekly close. So that's going to be close. Let's work our way down. So Apple, out of all the big tech tickers, probably looks the least concerning at the moment, even though it still has this nasty looking head and shoulders going on the daily time frame here. It's trading relatively flat at the moment. Selling volume pretty strong, but look at the weekly. You see how we have really strong wicks going on with the weekly on Apple? Apple's backtesting this trend line right now, so we'll see next week whether or not this little reversal here at that support holds and it moves higher. It attempted a breakout right here, it looks like, of this falling wedge. And it's barely above it, but like I'm always recommending, look for confirmations of a breakout to the upside here with follow through. Because there's not huge buyer volume here. I mean, it's just kind of average, and then also this can very quickly reject and move lower, like we saw many times with AMD. So not going long on calls or going short on puts on this, just kind of calling it out because I know multiple people are on a lot of different setups right now on different types of tickers. So gonna keep working our way down through some of the big tech stuff here. We'll look at the daily and weekly. So weekly wise, you can see, I mean, Amazon's had multiple selling weeks. This strong seller volume here is not good. I can't recall if I posted detailed analysis for Amazon or not, but Armin says BTC looks ugly. Maybe not. I'll show you why here in a minute. And y'all know how I feel about crypto, so maybe there's a little bit of bias going into that play. But until we have the weeklies closing in the places I don't like them to close, I'm trying to not be concerned with it. But I'll hedge accordingly if we do break to the downside. Big tech, I mean, Amazon here, you can see it at least is attempting. The concern here is you're starting to see more and more of these big tech tickers that S&P rebalance today. What's this notification? What was the rebalance? Yep, DoorDash joined. Knew that. TKO. Yep. Sorry, saw that notification popped up. Want to check it. So the thing that's concerning here is you've got more and more big tech tickers that are breaking below their 200 EMA. So while QQQ and SPY, we can look at the levels on those here in a minute. Please always keep in mind, like I'm always saying, that ultimately the top weightings and top tickers for the indices the indices are being driven by those top weighting tickers, right? So same thing, ETFs relation to the indices. So the ETFs are being driven by the top weighted tickers, most of which you have Apple, Nvidia, and Microsoft driving heavily movement on QQQ and SPY. So that is where it's really important. You see I have this watch list set up here, and I'm actually going to touch on this while we're here because multiple people have asked over the last week for trading SPY, QQQ, SPX. Am I monitoring the others and how do I go about it? So I've got the list set up here, and let's say if I was trading SPX or SPY or QQQ and they came into a critical level. I'm going to jump over this one example from earlier this week because I know it was a really, really clean example. So we're going to jump over and look at it. So on Monday. All right, if we're looking on Monday at Nvidia. Nvidia had this intraday bear flag right here. All right, you see this? This is a intraday bear flag on Nvidia. So Nvidia just happened to be breaking this bear flag to the downside right as QQQ and SPY and SPX were at a critical level. They also had heavy negative gamma exposure at that level, meaning that as it went to that level, market makers had to sell off shares in order to hedge accordingly for their positions. So what happened and why this is important to kind of toggle back and forth through the top tech tickers as I'm doing this. For one, I saw Nvidia cracking that, but if I look back over here at SPX or SPY, we'll look at it on SPY just because I know SPX is kind of busy for a lot of y'all. So SPX, whenever Nvidia cracked, SPX cracked too. And then we hit the little consolidation there, and then we were in that negative gamma exposure level where those market makers had to actually come in and start selling to de-risk and to hedge. And all hell broke loose, and we dove, I forget how many points in that little bitty time span. It was like $10 or 10 points on SPY, but if you look over on SPX, Monday, that late session drop that came into play was right there. So between that and the end of the day alone, our move was 36 points, and then something's not right with the graph here. Oh, it was the next morning. It's when we opened it dove lower. Yeah. So that makes sense. So jumping back over, and the reason I'm mentioning that is because it's important to monitor these. And how do I do it? I kind of have them set up here to where I can click through. They are semi-alphabetical the way that they're teed up here, whereas I guess I could organize them based off weighting. I don't do that though because the weightings might shuffle around a little bit. So just calling it out, kind of walking y'all through that so that you get a little bit of visibility into how you can go out leveraging that for when you're looking at QQQ, SPY. I know that's what most of y'all are trading instead of SPX, but the reason it's important is because Nvidia, we're operating under our 200 EMA, under our 50 EMA here. So that's not great overall for our longer term trends here. Typically, you're wanting to be above those whenever you're moving. So if you look over here at QQQ and SPY, they are barely clinging to their 200 EMAs today. So watching those really closely right now. Ideally, things bounce when they hit their 200 EMA, but again, you need to watch and look at the top weighted things that are driving QQQ and SPY and SPX and MNQ, ES, all the futures as well, because ultimately at the end of the day, they're going to drive your movement. So it's good that Apple's kind of propping and holding things up today, because if it hadn't, things could have got really ugly. Microsoft also got its little bounce on, but it's trying to hold solid, right? So, like I said, Nvidia, Microsoft, Apple. You watch those three, not to say that the other top weightings aren't important, but those three alone carry significant power across the indexes and the ETFs. So, definitely worth keeping an eye on those to see what happens. Looking at Microsoft, since we're sitting right here already, on the weekly, this thing's not looking so hot. So we broke down from the neckline technically on the head and shoulders. I want to see further confirmation. That 389.17 level that I mentioned previous weeks that I really wanted to see whether or not we could hold. It held temporarily, but my concern here is that the 200 EMA, because we already lost the 50, is way down here, which just happens to be right below where we could have confluence of a 200 EMA and that support, which was also a critical demand zone, supply zone level in the past, and then also combination of the measured move for the head and shoulders. So not loving, again, not trading calls or puts on Microsoft here, but once you start to kind of look at things across multiple time frames and you're looking at multiple different types of indicators, like you can sort of see where there's bullish things in play, but there's a lot of bearish stuff going on right now on the chart setup. So when I look at it, I'm not going to look at it from a vacuum or like with a specific lens, right? As much as my inner bull wants stuff just to rocket and I buy the dip, I'm not going to do that when looking at technical analysis. I'm not going to do that when entering trades, because that's how we all get burned. So watching the setup here to see, we already lost an uptrend. I'm not loving either this dissipation of volume on the daily. See how there's a very clear downtrend going on here with the volume profile. Oh, y'all can't see the little circle thing I'm clicking to make it pop up, but I mean, this right here, you can see my cursor. That's tapering down as price action was attempting to move up. That is buyer exhaustion is typically what you're seeing there, which makes sense whenever you see that the daily candle on Microsoft actually broke down, gapped down, and then moved higher, but closed lower. So this is not bueno at the given moment. What I would be watching for on Microsoft here is whether or not it breaks to the downside of that, or maybe it can push higher and it can get a break to the upside here. I would be careful. Like, I'm still not going to swing something on a setup like this just because the risk in the current market climate is way too high. But if it can break above, you could see a move maybe right there to 404, but that's such a tight range in the market climate. Again, it's just so high risk right now. Contract premiums are sky high, so I personally won't trade calls in that kind of setup just because risk to reward doesn't make sense. But calling it out so y'all can actually see that both ways. From a technical standpoint, we're very much still in a downtrend on most of these things. So most of the charts, and this is Google, just to be clear, Google doesn't have good liquidity or anything. So watching Google here on the weekly, because it lost its uptrend, it's attempting a reversal here, which is a good sign. You can see how different this looks compared to some of the others, but it's a similar thing to what we just looked at on Microsoft. As our price action's moving up, volume is dissipating, which tells me that buyer exhaustion is beginning to occur. So I think that ultimately what you're starting to see on a lot of the charts is the reality setting in that there's a lot of risk and uncertainty right now. So you're not getting a lot of institutional buyers that are buying into big tech stocks. The rotation is actually going out to multiple other things. I haven't looked today, so let's look real quick and see if inflows today were actually any better than what they were yesterday. Yesterday they looked rough for big tech. So yeah, I mean, S&P got a little bit of movement today. technology has a little bit, but we're still getting heavy flows over utilities and energy at this point. So be careful. Um, if I had to guess, because I was watching a lot of the flows today for big tech, they let things pump a little bit today, and I saw a flood of calls being sold to open on Nvidia, Tesla, Apple, Amazon. Like lots of sell to opens going on with the bigger whales in the funds right now on the calls. So typically, when that's happening right into a key resistance level, um, they're hedging for further downside, and they're going to position to make gains off that drop. So, um, looking here as well on Google, the 200 EMA is now acting as a resistance overhead on it. So, volume taper going on here. Be careful. There's just a lot of risk right now. I know I've said that multiple times, but a lot of these charts look really ugly at the moment, which makes me a little sad. I don't want to look at retirement accounts at this point that are more hands-off approach. Um, I'm also a big fan of not just doing the blanket easy statement that's sort of the easy out of saying, oh, just dollar cost average and you'll be fine eventually, because that's cool until you have life hit you with a curveball or something you need to get into your funds, or something happens and you do have to sell, and then all of a sudden it's not so good, right? If you have funds available to make gains in the meantime, make it grow in the meantime, and then enter things when I dollar cost average into something for longer term holding. I do so once I have a confirmation of a reversal on the daily or weekly time frames. AMD is a good example of that. I've been super patiently waiting for AMD to finally reverse at some point, which each time I've waited here, I'm very glad I did, because each time it broke down further. So as of right now, AMD's not looking good. It's looking like it probably wants to minimally test that 94 support. I did the math for somebody the other day between, if we do crack 94, we head to 74 as compared to buying shares at like 114 to 120. And you're talking about your cash effectively buying you like 50% more shares, which is a significant size whenever you're talking about scale. So, walking through this, I mean, you're seeing a common theme, right? And this isn't me being bearish or anything like that, because I traded calls and puts today. I actually traded one more call than put. But you're seeing a trend of things that are kind of popping up on Fridays, and then random news or something comes in the following week. Like, look at the candle last week on Friday for Apple, which was in better shape than most things. Yet we opened and we dropped, and then we made a new low. So a trend is still intact until you start forming higher lows as well as higher highs. And here we continue to make new lower highs and lower lows. Same thing on most of these other tickers you're going to look through. So Meta is attempting to hold this zone here. We'll see what happens. Yeah, it's got at least this one big pin candle going on with the large buyer volume, so that's good, but it did still close below yesterday's close, so still not in great shape yet. Netflix caught it dropped even further today. Yesterday this thing had a big drop, so that actually would have been one where, had someone been positioned in puts, that actually would have banked really well, because the put premiums probably weren't through the roof on that thing. And had you entered yesterday morning, I bet they're huge gains, because that was like an 80-point drop. So I didn't get in on that, unfortunately, but made some solid gains on SPX, so it's all good. I just really don't like how a lot of these charts close. It's not good, guys. We got inside bar potential here. Nvidia is trying to hold that support range, but it's doing so. Yeah, that's still not looking great. I mean, we've had to confirm reversals out of a lot of this stuff. I was really hoping for Nvidia to move higher too, because I need to sell covered calls again, and I didn't. So, kind of regret not doing that on Wednesday. Armin, real quick before I go over Fubo, let me glance at QQQ and SPY. So we glanced at a second ago. It's barely holding the 200 EMA, and that is the EMA. I'm not losing my mind. Okay. Barely holding 200 EMA here on QQQ, which again, watching the top weightings to see how that's happening. But also we've got this big ugly bear flag that is formed here as well. So we'll see next week whether or not we can hold the range, or if this ends up being a retest before breaking down further. But definitely want to be careful on a lot of these setups right now because we can see more downside, and I want to wait for reversals before I attempt to enter into calls on anything. Probably will still steer clear of big tech, but if some of these big tech tickers start to get reversals and the market as a whole gets a reversal, there's a lot of other tickers that have cheaper contracts and better risk to reward that they move up with the market. So we'll be able to get into those. SPY tried to pull an outside bar here, so we'll see next week if it can get some follow through to the upside, but we also held the 200 EMA, so that's positive. We'll have to see whether or not we get random news between now and next week that serves as a catalyst or an excuse for getting a movement one way or the other. IWM, it completed that downside breakdown from its last bear flag, right? And this, like when we're looking at QQQ and SPY, right? So yeah, these bear flags are here. And when I draw bear flags, the technical pattern is completely and totally valid. It's not me being bearish. I'm drawing it because that is there. It's not saying that it's going to break down and happen tomorrow by any means. It's something that you need to keep an eye on. And if you watch across a lot of these big tech tickers, they've had that setup and a very similar setup over the last several weeks, and they ended up playing out. So I deleted them as we kind of went through them, but IWM I haven't deleted yet, and you can see when that broke down from its bear flag, while it did take a few weeks, I mean, it ended up breaking down hard and it perfectly tagged there, and it's trying to hold that level. So deleting that now. But, and that, just to be clear, that doesn't mean that you get a bounce at that level. Same thing if you have a bull flag measured move to the upside, that doesn't mean you necessarily get a rejection at the top of that measured move either. It just means that the current pattern has played out, and now we can see here whether or not we bounce or whether or not we consolidate, form another bear flag, and break to the downside again. So just, again, watching a lot of these charts to see what's happening on them, see where we go from here. Jump over to Fubo real quick because I don't want to leave Armin hanging. So Fubo's trying to hold that support we've been watching, dude. What's it look like on the weekly? Weekly's looking like it's trying to back test and hold. I'd look for follow through next week on this thing. I'm gonna go ahead and redraw this over here off the weekly now, just because like that's my here. Sorry, I moved it too far. And I do that because yes, it was based off that before and we failed that breakout. I'm moving it up because this would be an even more conservative breakout, is why I went ahead and moved it. So if we do break out to the upside of this trend line now with strong buyer volume, that would be a good indication of a continuation move to the upside. So watch Fubo here because you also, aside from potentially filling that gap to the upside, this thing could break to the downside. And let me mark this gap real quick so we have it. The reason I say that is because you've got a rising wedge right here. And I know it might not be obvious, and it's all about the learning. So we are going to draw the line. Rising wedge. So watch this thing because it could break either way. I mean, that the buyer movement there is good, except that's lacking volume with that upside price action, similar to what we talked about on some of those big tech tickers. So personally on Fubo, I'd probably kind of wait to add to a position if you're in one right now and see what happens. See if it can get some more bullish movement. Let me click over to my list. Yeah, I'm going to pull up Bitcoin real quick because I know it's crypto time for a bunch of people. So daily, right? We broke that move to the downside. It looks like it's trying to decide what it wants to do from here. So there's a bit of a bear flag starting to form, but it's more of like an indecisive pennant it's got going. Oh no, I double clicked. So watch what Bitcoin does as it gets tighter in that pennant there. Weekly wise though, like, so I'll get more concerned once I start to see weekly closes below the 87 to 90k level, which you can see right now. Yes, we are below that. We were also well below that if you looked last week before that crazy stuff happened. We were way in the range we currently are right now, and then random news came in and we absolutely ripped last Sunday. So keep an eye on Bitcoin and some of the others to see whether or not they can hold the key support range. If not, I'll post detailed analysis for some of the key levels that these things are going to go to the downside. But I'm not selling any of my crypto this cycle anyway, so watching accordingly to see what happens. I haven't covered RGTI yet. I will cover it right now for you though. So they had earnings this weekend. They dipped off earnings, but I think they got to bounce back. Yeah. So RGTI is actually trying to build out like a nice little fresh pennant here. It looks like off of the crappy earnings. It looks like. I might. I'm all right. So one thing I haven't mentioned yet. I might have mentioned it in the lounge earlier. I don't know. I actually saw some interesting movement today for RGTI on calls on one of my screeners. I didn't act on it yet, which after seeing this, I kind of wish I would have. But especially because they were IV crushed following earnings on Wednesday. So yesterday and today, premiums were pretty cheap. Hector, I don't know if you're on the stream or not, dude, but I will message you back here in just a minute. Nick, I'm watching the Head and Shoulders on XRP, dude. I think I had it marked. I think I might have removed it this weekend because I was trying to scalp futures on it, and it was getting in my way when I was trying to move stuff on my mobile app. But I'm watching that Head and Shoulders on XRP as well as the bullish setup. I'll show you here in a minute. But RGTI is going on watch list for next week for swings. I know the options premiums on this thing are wacky. I might buy shares on it though and sell some covered calls. Where's my little list? There we go. RGTI calls and shares. Putting this on the list so I can track it accordingly, which some of y'all know I'll be in Finland next week, but that's not going to stop us from trading. Market opens at 4:30 p.m. next week. Basically is how I'm going to look at it. So RGTI, we looked at that. We look at XRP. Even though we're flipping back and forth with crypto, it'll be alright. So XRP, right? That Head and Shoulders is absolutely there. Here, let me go ahead and redraw the pattern on there for you so that we have it. I'm going to redraw this thing off the weekly here in a second. That's why I didn't draw it the right way, by the way. In case you're like, what in the hell did teachers draw? Damn, why does my screen look weird right now? Here we go. It's like part of me wants to exclude that random wick, but part of me is like it needs to be there, which makes it a more conservative neckline. Because technically it did tag that, which that's one of those random moments where if you happen to enter like a long leverage 25 or 50x position on XRP on that random freaking dip, and I don't even have to look. I know it tagged 177 that day because it was like a little 2-minute blip that it tagged that level and immediately ripped back up. And it actually happened. It wasn't one of those random exchange glitches. Like it actually occurred. So like literally within that day, XRP moved like 40 something percent on the rebound. So that's one of those trades that like if you happen to go long off that support bounce, which happened to be this key support level from the previous bull flag breakout, then you could have had massive gains. So Nick, what am I watching here? I'm watching just like what we see on SPX and several other things all the time. There's bullish and bearish setups in play here. So you've got the bull flag, right, which is still here on the larger time frame. We're still watching that. It's not invalidated by any means. It's still valid. This is kind of the consolidation zone that it's chilling in. Upside breakout easily puts it past 420 if we break out to the upside. But also watching that Head and Shoulders to see, is that going to break to the downside? What was your question? I'm never billing on it. Man, you haven't hung out with me enough to know how I feel about crypto. Like, so if it does break the neckline, I will hedge with leverage short positions on some of my crypto, but I don't sell most of my long-term crypto on cold storage wallets stays on the cold storage wallets because I'm about that hodl gang. So since 2017, dude, if I can ride through 2018, 2019, I learned the hard way and sold off a little bit of crypto back in 2020 and regret it ever since. So it's no. Um, yeah, so I'll be watching that. I mean, ideally we break to the upside. There's a lot of regulatory stuff that is coming into play, which I've got mixed feelings about with XRP and some of the others. My inner true OG crypto self doesn't like that because I also know the whales aren't big fans of that, but we'll see. I do think that there's a lot of positive catalysts that will come from a lot of the stuff that has exposure within the ISO. Going blank. What is in there? I know H bar's in there. I know. Give me the 2000. Yep, there we go. Yeah, so Hedera, XLM, like these are your ISO. Ooh, there's so many more than the last time I looked in this list. XRP, HBAR, XLM are some of the key ones, and Algo would be some. Quant's also a good one to keep an eye on. But those are going to have good positive catalyst exposure. I say that more for a longer term adoption standpoint. I'm very much a big believer in watching out for crypto sell the news situations to occur whenever you have anticipation building on some specific crypto event, which is probably what you're seeing right now with the Crypto Summit today, right? So, what time Crypto Summit start? 3 p.m., right? Right in this area. So, see the volatility that occurred and then the kind of drop off from there. So, when there's an event, and XRP was actually a good example of that back whenever they went on, what was it, 2020 and some other stuff. I had it marked on here, but I removed it. But a lot of the cryptos, like when there's a news event or data driven event around it, it's a really good opportunity to make huge gains with leverage futures. I think on that one XRP, that one Sunday night, whenever it was on 2020, I made like 600% gains on a small leverage short position on XRP. I'm not bearish at all on XRP, so you gotta be open to making gains both directions on a lot of these things. Same thing with stocks and stuff. So watching a lot of this, y'all saw it throughout some fresh alerts on quite a few cryptos today. Litecoin's one because like while it has this bear flag, it's got this head and shoulders here. If you're looking for longer term holdings on it, anywhere sort of in this 80 to 105 range, give or take, is a good area to kind of add longs on Litecoin. It's also holding its 200 EMA at this point, which is good. Litecoin gets a little bit different exposure. It is on Bitcoin chain, so we'll see what happens here. XRP is getting pretty solid pullback. It looks like with the 3 p.m. hit. Look at this 3 p.m. right in here. Rapid volatility drop. So keep an eye on that. Bitcoin dominance is still maintaining too. So like alt season hasn't fully occurred yet, regardless of what people say. Y'all, if y'all been on here for a while, you know how I feel about Ethereum. I still hold like I think it's 79.99 Ethereum, and it's always been right there under that level, and that's why I won't buy any more, sell any. It's kind of like the inside funny at this point, but you've probably heard it before. I'll go ahead and say it for those that maybe haven't heard it. Not a big fan of the gain potential for Ethereum this cycle because I think that there's a lot of overhype that goes on with it right now because people expect when alt season happens that Ethereum will benefit like it did in the past, and it won't. Reason being is Ethereum had the backing of crypto miners when it was proof of work back in 2020, 2021. Well, they went proof of stake since then, which means they no longer have the mining community and the movement and the volume and transactional use going on like you had back then. So what you have now is ultimately Ethereum, even with all of its improvements and changes, is still sort of ridden with this congestion on the blockchain, really high transfer gas fees, and ultimately there's better projects out there at this point. So still hold several things that are on the Ethereum chain, still hold my Ethereum, but I don't foresee Ethereum having like some massive, multi-100% gain potential off of this cycle or future cycles really. I think you'll start to see more saturation across other blockchains. A lot of the allure that came into play with meme coins and whatnot, people have now switched over and use Sol or Solana now, right? So cheaper, faster movement, better chain overall. Solana's still trying to hold its bullish setup on larger time frames, so I'll actually probably be adding, which y'all don't even want to know my average on Solana. Some of y'all would be salty, some of y'all would be excited, but my average is like $16 for those that don't know. I might add some salt to some of my more active wallets that I use for transactional movement. I won't add necessarily to my cold storage wallet here, but we'll see. I think Solana's got a more promising future than quite a few other projects do at this point. Now we've talked through a lot of crypto, and I know that's a thing for some of y'all, and for others it's not. What are some other tickers? It looks like I got a couple of requests here in the lounge chat too. Let me grab Hood. Yeah, I got you. Analyzer, aka Chapito. That's his YouTube name for those that are like, what's he talking about? So Hood is trying to get its back test on. I told you I really wanted to add new long calls to Hood. I'm actually going to put it on my list to flag for next week. Hood calls. Ideally, I would like to see a bounce here. I'm going to wait for confirmation or for reversal before I do anything. Unless it's a intraday quick lotto trade like those Hood calls that we traded on, what was it, Tuesday or Wednesday, that ended up ripping and never stopping. Hector's on the free. Yeah, I'll send you a message here in a little bit, dude. Chipito, I'm still going through your list. So yeah, Hood, let me drop it over in the chart analysis thing for me to actually pull a detailed chart and TA for Hood for you. That way I got it. CMG, Uber. So Uber I need to look at because that was another one that I've been watching super patiently to enter more long calls on. And it looks like my patience may actually pay off on Uber. Woo. So you got a potential falling wedge breakout here with increasing buyer volume. So if we get follow through on this next week, especially if it gets a little push above that 77.22 level, good opportunity to long Uber probably. So keep an eye on that heading into next week. Yeah, it's looking tempting. I want to see if it can hold that breakout though, because otherwise it's going to backtest this trend here. So definitely watching that. What else? CMG. I don't know if I've got a CMG charted. I do have it. You must have asked for it before on here. So Chipotle, which they just built the new one like half miles from our house, and my wife and kids are excited because they're all about the chips and the queso at Chipotle. So it looks like, I mean, from a technical standpoint, it's trying to hold this range. That is a bearish engulfing weekly candle there, so that's not looking so hot, but it's trying really hard to hold that support range. So I would watch this into next week, but that is heavy seller volume right there going on. See what happens, see if it can hold or if it breaks down further. We'll close this out since we're kind of going through miscellaneous tickers now. The BA. So BA was another one that I kind of was trying to keep an eye on. Just got sidetracked. BA broke to the downside. It still has heavy seller volume going on with it. So yeah, be careful on BA. Maybe it backtests and bounce here, but we'll see. I really don't want to look at BA too hard right now because I'm getting on an airplane Sunday. So like, if you catch my drift, I'd rather not at this point across the Atlantic. So quick, I need to look over at my top step real quick. I'm curious if these 5 combine accounts all went funded already or if they are still doing their, nope, they're still trade processing for the day. Guess they take forever. For those that have been following along, I opened 5 new combine accounts on Top Step 2 days ago, and then passed the combine in 2 days again for 5 new accounts. So we'll be trading more futures in the coming week. Stay on the lookout for those that are in any of the Discords. I'm gonna alert some futures alerts for some stuff I'm gonna trade Sunday night while flying over Greenland. So that should be interesting. As long as the plane Wi-Fi cooperates. Nick said, what do you know about Cafe Rio? I don't know, man. Here in Texas, we got lots of options. We got, Freebirds, Chipotle, several other local branded places too. But see, we did Uber, we did Chipotle. Oh, Google. So Google, we touched base on earlier on in the video. Chipito, if you want to go back and look at that. Let's see what other tickers are in the BR. Sorry, reading. Our great state of Greenland. Yeah, dude. I'll get a picture of it for you. Nick, you're in Texas? Did not know that, man. Did not know that. I don't know why I didn't know that. Now I feel bad. Which, by the way, your shirt should be, I think, coming. All the order. You and Murad got one as well. Trying to pull up this other list of tickers. Applied's looking good. So Intel, I think, is still kind of in the same range. Oop, no. Oh, no. Yeah, so Intel, which is, like I said, we've been watching this one. It's more of one that it's not trading purely based off technicals. It's trading based off some options movement, but also I don't see this thing getting a big breakout to the upside until they get news related to a new CEO. You can see from a trend flow standpoint over here, all the trends are down. So watching Intel here to see what happens. Let me look over here real quick at T with a rebound. So, all right. Great kind of learning opportunity here for people. So, measured move of this breakout, this bullish breakout, was at 29.51 level. Like I said when we looked at this a couple of days ago, that was heavy selling volume and drop, but we wanted to see if it back tested that level of support that was previous resistance, and you can see here it bounced beautifully off of that level and got this nice move to the upside. Trend flow still showing strong on all of that, operating above the 50 EMA and the 200 EMA. KTM said, have you seen the politicians from Texas? Pretty sketch. Dude, I live here, but like, agreed. Just saying. Yeah, so anyways, we're not going to turn this political, at least not on the stream. The other tickers that we're talking through here. Let's see. So Rivian, I'm watching Rivian here to see if it catches a bounce. You can see we're still in downtrends across the board, but it's trying to hit a reversal here. Rivian's one of those ones that has really odd movement as you kind of head into a zone like this, and then all of a sudden buyers show back up and it just rockets. So this is a good example of another stock that, even though it's tied to Amazon to some extent, it can sort of do its own thing within the broader market. So there's quite a few of these tickers like this that I've been monitoring closely for fresh swing trades on. I know that like a lot of us love our swing trades, right? Because the day-to-day volatility and trading stuff like SPX and SPY and just chaos volatility can be stressful. Plus, people have day jobs, so it can be hard for people to trade stuff like that. So personally, I think it's a little bit easier to swing hands-off stuff. But like I was saying earlier, it's dangerous right now to swing a lot of the big tech stuff. There's a lot of other tickers that have a lot cheaper options, better risk to reward. Rivian's one of them. This is also one I like shares on too. So I should have bought more shares on this last week when it got a dip on. Maybe what I'll do, some of y'all have seen kind of the gains I've been doing with the SPX on that Robinhood account. And I've been taking, and each day after we start with 5K and grow it to 9K or 7K or 21K. In that one instance, I've been taking and moving the funds back off the account and clean slating it to 5K each day. But what I might do on some of these is take the gains above 5K and park them in a stock for some shares and leave them on that account so y'all can monitor them a little bit better. You know, I didn't do Tesla yet. Now that you say that, Chipito, I don't think. Let me go look at it here in a second because there's some good stuff I need to show you on that. But I was putting Rivian real quick on my list to watch for next week again. And let's jump over to Tesla real quick, and then we'll talk back through some of these others. If I could type Tesla, we'd be good. So Tesla, like we've been watching, has now filled this gap to the downside at 255.28. So that's what I was warning about, and I know people are not going to like this and not agree, and that's okay. I hold long-term shares, so I say this without bias, but it's likely going to fill the next gap. We are still very much in a downtrend here on Tesla. It's still a political climate that's not great. EV sector is not doing good. Rivian's got a little bit different catalyst and stuff that impacts it. Same thing with Lucid, whereas Tesla's getting, kind of smacked from a consumer standpoint. And I know you're going to hear an argument from a lot of people that ultimately Tesla's not a car company anymore. Correct. However, majority of their revenue still comes from automobiles. So, watching Tesla here to see if it bounces. I hope it catches a bounce because I am exposed on some of my shares without covered calls at the moment and really need to sell more covered calls. But we have now negated the entire election run-up on Tesla at this point. And, I mean, people think it's nuts, but flashbacks to 2022 on Tesla, right? People thought we couldn't dive that fast again, yet here we are. Diving actually at a faster pace now that I'm looking at this. Wow, did not realize that. Huh. That's interesting. I mean, I'll keep hedging, but yeah, we broke the uptrend for that trend that we've been respecting since April of last year as well at this point. So Tesla's looking like death right now, honestly, is blunt as that sounds to state it that way, but Tesla's looking rough at the moment on the weekly, daily, and multiple other time frames. So it might get a little relief bounce here. Personally, not going to even try to jack with calls on that for all the reasons I mentioned earlier as a buyer. Like, it just, risk to reward doesn't make sense. I'm not going to risk $500+ a contract overnight on something that may yield 20-30% gains, or it may go negative 60% in a day. Like, no thank you. So, yeah, Tesla can go lower. I'd like to see it get a retracement bounce and sell covered calls on that, but it may be lacking if it does get one. So just be careful if you are in Tesla. Hedge accordingly. If you don't have enough shares to sell covered calls on big pops, you can use puts to do that. So hit me up if you need kind of help or a little bit of coaching on what might make sense. Not a financial advisor by any means, but I can maybe give you some examples that you can explore yourself and see if they make sense to use. But be careful on Tesla here. Let me look at MicroStrategy real quick. The MicroStrategy's trying really hard to hold a reversal off the 200 EMA, as well as backtesting this downtrend right now, which I imagine it's down in after hours. Yeah, it's weekly. Weekly wants reversal, but still lots of sellers. So yeah, watching MicroStrategy, because MicroStrategy and MSTY, which these don't move in exact tandem, by the way, for those of y'all that haven't figured it out yet. MSTY has exposure to multiple options for MSTR within it, not directly like a correlation to percentage movement, like Tesla or something, or NVDL and all that would be. So MSTY dividend, yeah, is a little bit less right now, but if you're long-term reinvesting and stuff and you expect continued volatility, MSTY might still make sense for you. Let's see. I'll tell y'all what I almost did this last week, because a couple of y'all would have found this interesting. So some of y'all saw that one Robinhood account went from 2,100 to 9K to, I think it was 11K to 19,400 to 21,300 K across a 2.5 week period. I almost, just for giggles to make people go nuts, bought 1,000 shares of MSCY on that account. But I held off. I did not do it. So I shifted the funds off and was smart. Like, I say that, I probably could have made bank on dividend reinvestment with that had I done it on that account, but it's all good. So because I could have done that and left over like 2 or 3K on that account to trade options with to kind of rescale it back up. Let me check real quick to see what other tickers we got. Now I'll wrap it up here in a minute because I don't think that the little ones and my wife are feeling all that great. So Mobilize one to keep a good eye on. And to next week, see if it catches a retracement bounce and moves up here. Enviz had crappy. Wait, they moved their earnings? No, they just. Wait. Really confused right now on Enviz. What's going on there? I haven't kept up with what they're doing earnings or not doing earnings, so I'll watch Enviz to buy more shares probably. Applied Digital's trying really hard to hold that same support range here. If it can, and if it can hit a reversal, this one's going to be a good one to make some solid gains on. We glanced at Rocket earlier, but this sucker is rocketing, ripping above the 50 EMA and 200 EMA and pushing higher right now, so Rocket's looking solid. Man, Nick, get up. Nick's up here talking about the 20K you DM'd me about sending yesterday. Stop it. Because the spammers are out there asking people for money too. We don't even joke about that. SoFi is back testing that same support range in the 200 EMA. So like I told y'all 2 weeks ago, once we broke down from the head and shoulders, watching this range to see whether or not we can hold. Ideally, I'd love to see us get back above 1330 and 1332. I'll wait for the reversal to start adding into longer term calls. AI tied to Nvidia and everything else right now, right? So bullish engulfing daily, but might reverse, might not. We'll see. But delete this since we already played this out. I feel like it's adding noise to the charts. Lucid's in my favorite little buy some shares for giggles range because I know it's low float, and when I say low float, not technically, but knowing that the Saudis own like some ridiculous number of the shares, it basically is low float at that point. Because I bet this thing rips and bounces right back up into that range. So need to put Lucid on my watch list for next week. GitLab took a dive off earnings, it looks like. Box consolidation range. Fubo we looked at earlier. BBAI, so it dove off earnings, but it caused 200 EMA in that support level there. So what you want to watch for next week on BBAI is to see, does it catch a bounce here and start to move higher, and does it confirm with follow-through candles on Tuesday, Wednesday maybe, a reversal, or does it break to the downside and retest this 235 range? So heavy selling, but some of that could be due to earnings happening. We'll see what happens. Minimally, it might try to gap fill. So I'll be looking at BBAI to see, does it confirm a reversal and bounce? Did I do SoFi? I think I just did actually, now that you say that. I just now saw your message, so that was just a freak coincidence that I happened to click on SoFi as you asked about it, dude. I was just going through the list. QUBT looks like it's kind of back testing, but it's got this bear flag breakdown and it's now below its 200 EMA too. So, alright. Any other last minute ones y'all want me to do? If not, I'm going to wrap it up and go rescue the family. Real quick though, we got to see if the combine accounts are. Bam! Congratulations, you passed your training. Wait, hold on. Why is there only 4? Oh, because the last one hasn't finalized yet. So, got 5 more combine accounts passed. Unless one, I might have made barely too many gains on one of the accounts. Now I gotta look. Crap. Here, I'm gonna show y'all. I'm gonna be really transparent right now. It's okay. That's not the. There you go. I don't know. So, like, you can, for those of you that mess with futures, you can pass the combine in 2 days. I've done it multiple times now. The trick is you have to make right around $1,500 each day on the account, and then you have to like just be done. So I'll usually make like the first day I made like right under 15. The second day I'll make a little bit more. I think though I messed up and made, because I had on one lead account and copy trading to the other four. I think I messed up and made tiny bit too much gains on one, and therefore, wait, I'm confused. Oh, it's there. So they all five passed? Yeah. That's not confusing at all. Anyways, all right, I'm not gonna waste more of y'all's time like going through this on here. But yeah, for those that haven't messed with futures trading on Top Step and stuff, basically like you pay a price and you get access to do their accounts. Then once you're on the funded account, by passing the combine, you trade with simulate funds, but you can take your payouts just the same. So if you get good at this, futures trading is kind of ridiculous, like how much gains you can make on a consistent basis. Because like what my approach is, that I'll be using these accounts just like I did some others. Starting next week, these will be they will be express funded accounts, which means that I can actually make gains on those accounts and take the profit. So this is gonna sound crazy, but you trade and make only $200 a day on the lead account, right? Which you have 5 accounts total set up if you have 5 accounts, and you copy trade, so you only have to trade on one. If I make $200 a day on that account, that's $1,000 because it's 5 accounts, right? So that's $1,000 a day. If I only make $200 a day on each of those accounts, and I do that for a week, that's $5,000 a week in gains on like something that is, honestly, if you're an active trader that knows what you're doing, it's pretty freaking easy. The key is having discipline and consistency. So the way it works is like after you have 5 days of $200 gains or more, you can actually request a payout. So me personally, I'll probably build some padding in, because like there's different rules. Like you can't have a max loss of more than like $2,000 or something. It's more if you're on the 100K or the 150K account, but basically you trade on the account and then you can take payouts from it. If you trade on the express funded accounts successfully for a period of time, then you get called up to a live trading account, which me and a couple other people are not trying to do that, because I don't want a live traded account, because I can make the money and get the payouts and stuff with the express funded account just fine. It's like easy passive income of 5K plus. Nick said I need more info. That's why I was going to talk through it a little bit. I figured some of y'all would be all over this. Tony's been working through his combine account so far. I think the biggest thing that a lot of people struggle with, even myself early on, was trying to switch the mindset from like when you're trading options where you might stay in something a little bit longer, as compared to on futures, like entering the trade with your specific plan, setting a stop loss on the trade accordingly as soon as it is up, because they can go up very quickly, moving your stop loss to where it's green, like and just consistently locking gains if necessary is kind of the key with these. So like I said, you only have to make $200 a day, which honestly with the volatility we've had lately, like stupid easy. Both days on this that I hit the $1,500 target amount for the day, I actually had to sell the position way early based off of where I set it, because otherwise it would have made too many gains in a day, and it increases like your target amount that you have to actually get for each of those days. So I actually had to sell positions earlier than, oh, there it is. Now the final one shows. So now they're all 5 valid. Sweet. Oh, I didn't grab my screenshot of all of them like I normally do. But yep, cool. All right, I'm gonna wrap up now. If y'all got questions and stuff on that, holler at me. If anything else comes up, reach out. If not, I hope everyone has a blessed and great weekend, and we will be back at it next week. Thanks all.